Before I continue discussing the markets, please take this moment now with helping me and subscribe to my YouTube channel. Click subscribe, click this bell, click all. This helps you receive a notification when I post my next videos. Next, click the thumbs up button every time you watch my videos. Okay, let's continue with the view of the markets. Hello, welcome to another video, Winning Wall Street's Money. I'm going to discuss commodities. First, I'm going to discuss some content to put it in relationship to the Treasury yield and the US dollar. So countries have central banks. In the United States, the central bank is called the Federal Reserve. The Federal Reserve controls the interest rates. The United States has a deficit. The United States has hit record spending money, record deficit levels the past 4 years, and still this month and next month may increase that to a lot more with stimulus money. We're looking here at the top left, the US Treasury yield. As the US Treasury yield declines, it's the inverse for the bonds. The US Treasury Department offers several fixed income from bonds, notes, and shorter periods, 30-year, 20-year, 10-year, 5-year. But also as the yields go down, typically interest rates decline. And a weaker interest rate weakens the US dollar. All commodities are priced in the US dollar. Hopefully it's going to start seeing a correlation here. Lowering the interest rate, the United States is only paying interest rate on its debt. But weakening the dollar could have the inverse effect on raising the price of commodities. Looking here on this weekly chart, and the weekly charts are done. 2 weeks ago, this was 2 weeks ago, tested the swing high, this horizontal line. Prices tested it, rejected, and closed down, and reversed. This week, we made a lower high and lower low, reversing, going lower. Again, that may have an effect to lower interest rates, since the United States is only paying interest on the deficit owes. Here is the US dollar index, has been declining. Now it's in a consolidation. It broke out of the consolidation 3 weeks ago, trending on the bottom. We are at a prior demand zone. If we break that demand zone, we're likely retest the swing low, breaking the swing low here. Yeah. So if you're bearish the US dollar, you could be trading short the US dollar. Where Bitcoin cryptocurrency has been making new highs. All right, let's start looking at commodities. Again, on the weekly chart. First, we're looking at corn futures. Looking at 1 year corn futures on the weekly. We had an all-time high for the year, corn. A lot of products, commodities. Corn is used for feed for animals. Corn is used for ethanol. Huge demand still on corn, and prices going higher, and US dollar getting weaker. Some people say there's zero inflation. Maybe they're disconnected. I don't know what their perspective of inflation, but the charts don't lie. The price is not lying. We're hitting record highs in corn. Again, that has an effect on cattle, ethanol, to make those more expensive because they use corn in their products. Looking at soy futures, record high for the year. Soy is used in a lot of food products and feed. Record high for the year. Looking at wheat futures, in a consolidation near the high of the year versus the low of the year was here. We're still above the high at the beginning of the year. Yeah. Consolidation, breakout to the upside, consolidation, breakout to the upside, consolidation, staircase pattern, higher and high. These commodity futures are going higher, and you're paying more for them because it costs in US dollars. So a week, if you notice here, we hit a new high for this week for corn, soy, an inside candle for wheat. That inside candle, that yellow candle, That means indecision, means the high and low to not go above or below the prior week. Indecision. Be interesting to see where we break out to the upside or downside come next week. That's a potential trade idea there for entry. You don't have to trade the futures. You can also trade options on these and their stock ETFs. Let's look at the grains. Oh, we already did the grains. Sorry. Let's look at livestock. So since the US dollar is getting weaker, livestock costs more money, and as well as the feed that's used for them, the corn, the soy, is getting more expensive. Maybe less people are buying livestock. Looking at live cattle. Here's the high of the year. Here's the low of the year. We're in a consolidation, but we're not at record highs of the year. And we did make a lower low, lower week, lower low, lower high for the week, and rejected the prior highs here. So maybe cattle is going to go lower. This would be the demand zone. See what happens when it comes here. Lean hog also. Here's the all-time high for the year. It's been trending lower, lower, high, lower highs every week, coming into this prior demand zone. And feeder cattle, also all-time high there. Made a lower high, lower low for the week and closed red, declining. So for all these feeder commodities, they all closed red for the week and all made lower lows, declining in prices. Let's look at softs, lumber. Most of the lumber for the United States for construction for houses and stuff comes from Canada. You have to convert the US dollar into the Canadian dollar to buy these imports. Again, our dollar is getting weaker, so you're paying more dollars for Canadian dollars for this imported product. And it broke out of this consolidation and trending higher. The momentum's to the upside, it's bullish. So now this is a supply zone, and we'll see come next week if it rejects this and rolls back over or breaks up to the upside. Let's look at energy. Crude oil formed the inside candle for the week, so that means indecision. Look at this, for the several months, it's huge consolidation. And now it's going up to this prior swing high, this yellow horizontal line, that's a swing high. We'll see if it next week breaks above or below that inside candle, and that's a trade idea for the faster time frames. Faster time frames would be below the weekly, so that would be your daily and intraday. Potential trade ideas, a break on the up or down for fast trades. Natural gas, huge difference than crude oil. Yeah, red for the week, lower low, lower high, big reversal off the top. But again, we hit an all-time high for the year just a few weeks ago. And we had the huge till on the bottom. That means buyers stepped in here. Even though we close below the middle of this trading range, which is bearish, we still had a huge amount of buyers step in here holding it up, because this was the prior demand zone where buyers were in the past. Supply is where sellers were before. So there were buyers here in the past. We came down during the week, and apparently new buyers came in again and supported to bring it back up here. So we'll see what happens next week, if we're going to have a consolidation or if this trend will continue downwards. You could trade the stock ETF on this Uniform November GOF, UNG. I did send out an alert past day to my Patreon members of trading, as well as several days ago with the options on here. But look at the difference again, crude oil, a huge consolidation where natural gas has been trending a lot more. Either way, you can make money with options. Advanced strategy. Let's look at metals. Start off with gold. Inside candle for the week, indecision. It's right here at a demand zone. Buyers have been here repeatedly in the past buying. So maybe this is the opportunity. If you are bullish gold, why would you not buy gold here? Are you already in gold? Or do you think it's going to break down and go lower? So what kind of trade idea would one consider here? Well, if you're going to buy here, you might consider putting your stop right below the low of this week. So if you're wrong, you lose very little and you keep most of your capital. See what happens. Or if it breaks above that high, as soon as it breaks above that, you might consider going long. If you know how to use trading platforms with your broker, you don't have to sit there and watch it. You can set those prices. Yep. Silver, also inside candle for week, indecision. Seeing a lot of inside candles for the commodities. Copper, all-time high for the year. Look at that consolidation, breakout, consolidation, breakout to the upside, all-time high, coming to a prior swing high. Copper is used huge for industrial use. So there's a demand for copper and it's going higher. May not be for the United States, maybe more for Europe or maybe for Asia or some other countries. But again, there's a huge demand for copper and the price is going higher. Platinum. Here's the high of the year, the beginning of the year. Here's the low. And here we are now. Also, look at that huge demand. Broke out of this demand zone. Sorry, broke out of this consolidation to the upside. So there's a move for that. Yep, interesting. Big difference than the gold and silver. Look at that. Gold been trending down. Now it's at a demand zone. Silver as well has been trending down. It's inside consolidation, where yet copper and platinum both break out of the consolidations to the upside. Yep, that's very interesting. Let's just follow back up one more. The correlation. The treasury yields and the bonds. So again, we're in a consolidation with the bonds right now. Be very concerned of watching this daily, the yields and the effect on the dollar. Change on these also would affect the equity market. Higher interest rates cost businesses more for borrowing money, but also higher interest rates help the small banks because they're making more money. So there's pros and cons for both benefits. Yep. These are something to seriously focus on. Stay attention of these. If you like this market information I've shared and want to learn more with greater detail, step-by-step training, I have a Patreon page. I share trade ideas for earning monthly income. Below in the description box, click Show More. Scroll down. This link here, click on it. Take you here to my Patreon page. Select the membership and join. Then you have access to unlock my posts.